In this video, we are going to talk about what is cryptocurrency trading. So before starting this video, please like this video, and subscribe to our channel for the future updates. Trading cryptocurrencies entails taking a stake in the direction of each cryptocurrency's price, either against the dollar, in crypto/dollar pairs, or another cryptocurrency, via crypto-to-crypto pairs. A particularly well-liked method of trading cryptocurrencies is through CFDs, contracts for difference, which offer greater flexibility, the use of leverage, and the option to take both short and long bets. The growing popularity of cryptocurrency trading. Since Bitcoin's introduction on the internet 10 years ago, cryptocurrency trading has grown in popularity. Digital coinage known as cryptocurrencies are produced utilizing peer-to-peer networks or blockchain technology, which uses encryption to ensure their security. They are distinct from fiat currencies issued by governments around the world because they are composed of bits and bytes of data rather than being physical objects. Additionally, there is no central body or authority, such as a central bank, that issues cryptocurrencies or controls their circulation in the economy. Cryptocurrencies are not regarded as legal cash because they are not issued by any government entity. Cryptocurrencies have the potential to change the financial landscape, making them difficult to ignore even though they are not recognized as legal tender in the global economy. At the same time, new investment opportunities have emerged for traders to take advantage of, thanks to blockchain technology, which serves as the basis for cryptocurrency development. How are cryptocurrencies traded? There are various ways to trade cryptocurrencies. The first method is to buy and sell the virtual currency itself on a cryptocurrency exchange. Using derivative financial instruments, such as contracts for difference, CFDs, which you can trade on the Plus 500 platform, is another option to trade cryptocurrencies. The latter has grown in favor recently because it requires less financial investment and allows traders to bet on cryptocurrency price changes without actually owning them. You must decide whether to initiate a sell or buy position after choosing the cryptocurrency you intend to trade. In either case, a trading window will appear, as shown below. From here, you may choose the number of contracts and whether to carry out risk management orders like take profit or stop loss, which go into effect when a particular price is reached. The screenshot below serves simply as an illustration. In it, placing a sell trade would include the trader clicking on the sell button. Is cryptocurrency trading right for me? Like all forms of financial trading, cryptocurrency trading demands the right information, abilities, and capital. If you want to trade on the cryptocurrency market, you should make sure you have the necessary analytical skills. It should be highlighted that cryptocurrencies are riskier than most people are accustomed to because they are more volatile than regular financial instruments. Although there may be more opportunities to profit from this volatility, keep in mind that it may also lead to losses that are higher than you may be willing to accept. Binance. Users can trade cryptocurrency on the website Binance. The majority of widely used cryptocurrencies are supported. To keep their digital currency, traders can use the crypto wallet offered by Binance. Users can earn interest or conduct transactions using cryptocurrency thanks to the exchange's supporting services. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.